QuickBooks Pro Plus Desktop 2022 Barter Sale Barter Transaction Method number 2, which will include both an invoice form and bill form within the process. Get ready because we bookkeeping pros are moving up the hilltop with QuickBooks Pro Plus Desktop 2022. We are in our free QuickBooks sample file, sample raw castle construction, going through the setup process with the view drop down, the open windows list, left hand side, company drop down, home page, middle area, maximize on the home page to the gray area, opening up the financial statement reports, drop down on the reports, company and financial. Let's open up that balance sheet standard first. Then increase the font size to 14 magically in the customized reports font at 14. Let's go to the reports drop down again, company and financial. We're looking at the profit and loss, increasing the font magically to 14 with the customized. There we have it. Let's go back on over to the home page in the open windows now. We would like to record a barter type of transaction, a trading type of situation. So we provide goods and services in return for goods and services that are going to be provided for us, and try to use the same kind of flow that we might have in a full type of accrual process in order to do so. To facilitate the transaction, what we'll basically do is record each side of the transaction and use the cash account in essence as a clearing account. You can think of this as being similar to a situation where we're going to have us making the sale and then we collect the money and then we do business with the other individual and get goods or services from them and give the money back to them. Obviously, what happens in the barter situation is the money does not exchange hands in that situation. You just cut out the middle component and you just have the barter transaction for the services. That means that when we record it here, we can simply use, in essence, the checking account as a clearing account as if the money was exchanging hands, given the fact that we have the ending result of both of these flows on the vendor side and the customer side that of course deal with transactions that are happening, one increasing the checking account, the other decreasing. However, we don't typically want to use the actual checking account for this kind of clearing type of transaction, even though if done properly, there will be no impact on the checking account. It'll just go up and then back down, be back to the proper spot after the full barter transaction has taken place, because even though it won't affect the balance in theory if it's done all properly, it does result in these two transactions that are going to be in the checking account. And when we reconcile the checking account to the bank statement, we're going to have to check those two things off. You can do that. It's not the end of the world, but it can kind of complicate the bank reconciliation, which we don't really want to do. So what we can do instead is create another account that is going to be like a clearing account, but it's going to be a checking account type, so that when we make the deposit on the customer side, at the end of the customer side of things, it won't go into the actual checking account, but another account, which is in essence a clearing account that will act as if we're exchanging the cash so that we can use this full process. And then it will do the same thing on the in process on the bill side of things, and then it'll net out to zero. Okay, so the first part of this transaction would be to add the new account. So let's go up top and we're going to go to the lists. Let's take a look at our chart of accounts. Want to make another account. This time I want to make it up in the banking section so that we can use it as our clearing type of account for the end of these two processes. We're going to go to the account drop down or rise up, and we're going to go up to the new item. And we're going to say that this is going to be a bank account. It needs to be a bank account type so we can use it in these two flow assumption processes. We're going to continue. And then I'll call it, I think we're in the, I won't put the number here. We'll just name it down here. This is going to be the barter. I'm going to call it a clearing account, because once the barter is complete, it should clear back down to zero. That's not simply a temporary account, which is cleared out on the income statement on a periodic basis, but it's going to be a clearing account in that we're going to use it to go up and down in a very short period of time back to zero. Okay, let's save that, and that should show up. This name already exists. I got to say something slightly different because I got a second barter. I'm just going to put a period after it and say save it and close it. so that it'll show up here. I'm not going to set up any bank feeds. It's not going to act like a bank account or anything. It's just a clearing account. There it is up top. This time it's called a bank type of account. In the last method, we put it down here as an other current assets type of account. So now we can go back to the home page, and you can start this process either way. Now, if you do the bartering at the same point in time, you provide the services to each other at the same point in time, then it doesn't really matter which is the initial starting point when you enter the transaction. But you might be in a situation, for example, that you do your goods and services up front and you basically invoice the client, and then you could track that they owe you possibly not money, but goods or services, and so you might enter the invoice in that case first. Or you might be in a situation where they provide you goods and services that you would kind of like to track, so you enter the bill side of things, and then you can track, in essence, that you owe them goods and services in return. We're going to do the invoice process first here. I'm going to enter an invoice first. So I'm going to say, okay, this would be the same process as if we were doing goods and services. The invoice increase in the accounts receivable, other side going to sales. I'm not going to be dealing with inventory, assuming it's a service item. I'm going to call this customer 5, let's say. That's not spelled right. That's not spelled right. Customer 5. And we'll set that up. And I'm just going to do a quick setup for customer 5. And notice that when we do this on the invoice side, we have to call them a customer because all the dropdowns relate to a customer to make the subledger. And when we go to the vendor side, we'll have to make a vendor typically. So it'll be the same person, but I got to set up a vendor person and a customer person typically, even though they're the same person. So you got to be aware of that when you look this information up. And then here, I'm going to make this as of, let's make it as of 03/15/25, and we'll tab across this, and then the item that we're going to be providing, let's set up just a new item so we can see it. I'm going to say item number 3, tab, and we'll say yes, I want to create another item. I'm simply going to make it a service item. This is what we're going to do here. For the service item that we're providing, I'm going to say it's not taxable, so we don't have to deal with the tax related to it. And we're going to just put it into our income account and say save it. And we'll say that this was 1 unit, 5,000, just so I could see it. And there's no sales tax. This should increase then the accounts receivable account. The other side then should go to sales. So I'm going to say let's save it and close it. Check it out. Save it, close it, balance sheet. Let's check it out here. I'm going to change the date range up. We'll make it from 03/01/25 to 03/31/25, and then say OK. Processing that, and then in accounts receivable, we should see this increase now by that 5,000. So there it is. And then we can go on to the income statement, and I'll change the date range from 01/03/25 to 03/31/25. We can see then here we've got included there that $5,000 increasing in the income. So that looks right. And then of course we can track if we had some difference in terms of we did the work, they haven't yet provided payment, and or the work they're going to give to us. We could track that in the receivable by the customer, just like we could with any other receivable. Next, we could receive the payment. Now, the payment that we're going to get is not going to be cash, not going to be an electronic transfer, not a credit card, but it's going to be a return of the services. So we can then say, now let's imagine they do the services in return in order for the payment to take place. Two things have to happen at this point in time. Then we have to receive the payment, so we no longer have the receivable on the books. And we also have to basically enter, in essence, the bill side of things to represent the fact that we have an expense that is related to us getting the goods and services from whoever did the goods and services. So we're imagining the payment is being received now in terms of goods and services. We're going to go to the receive payment. Now, in the receive payment, we could deposit it directly into our clearing account at this step in the process. Or if you're more used to going through the full step, this one by default typically goes into undeposited funds, and then we make the deposit. So I'm going to do the full process here, but just so you can see the difference, if I go into this item, usually by default, this item doesn't have an option here to change the account by default. unless you change it to give you that change, which would be done in the Edit dropdown, Preferences, and then you go into the Payments area, and we go to Company Preferences. This is usually checked off by default, meaning, and if you have it checked off, you will not have that option, this option here. But if you uncheck it, then you have the option. So if I say OK, and that is unchecked, then I could change this to our Barter clearing account and deposit it directly into the cash account there. But if you don't do that, and we're used to going through undeposited funds, which is the default setting, we can keep it at undeposited funds. We're going to then say this is going to go to customer 5, and then we're going to tie it out to that invoice. So now we got the invoice that's being received. What's going to happen? It's going to go into undeposited funds as if we're holding on to the cash. We're not really holding on to the cash, of course. We got paid back through the service that was provided to us, but it's going to go into undeposited funds. I'm going to change the date up top to 03/20 and then make this 25 so we can record it. And then I'm going to say save it. Save it. We can't see the button down there. I'm going to save that and then close that out. And then we're going to go to the balance sheet, and it should be now in the undeposited funds now, has going up. This is our undeposited funds. There's the 5,000. The other side then going into or decreasing the accounts receivable, showing that that person has now paid us off. That would also show on the customer subledger as well. So then the next step, if I go to the home page to complete that process, is to take it out of undeposited funds, put it into the proper account, which is now going to be another clearing account, because we don't want to put it into the actual checking account. We're going to be putting it into the clearing account that we set up as a checking account. So I'm going to go to the deposit area, and we'll check this off. I just want to check that one off here, the 5,000 that we received. I'm going to say, okay, not in money, but in services that have been paid to us. And I'm not going to put it into the checking account. I'm going to put it into that clearing account, which we call the Barter clearing account, which will then put it into that account, decreasing the undeposited funds. So before I save it, I'm going to change the date up top here. Once again, putting it in 03/20 and 25. And so there we have it. I'm going to say save it and close it. And I'm going to say yes. And then back to the balance sheet. Undeposited funds should go back down now. So undeposited funds goes back down. And then it goes into our clearing account up top right there into the clearing account. So now we want to net this out against the other side, which is the bill that we got. So I'm going to go that we received on. So I'm going to go to the other side. I'm going to go through the full process here, entering the bill and then the payment. You could kind of shorten this by basically entering like a check form down below. The check form would go right into if you enter the check form, you can make this go right then to the Barter account again, a little bit faster. But let's go through the full accrual process. I'm going to enter the bill, and then we're going to say this is going to be the I'll call it customer 5 again. And the reason I'm calling it customer 5 is to match the name, because it would be the same customer and vendor. And I called the last one customer 5. The point is that you're going to have to set up a vendor with the same name. That name already exists. I got to make it slightly different. Customer 5 point. And then I'm going to add, quick add. And so then we're going to say this happened on 03/20, and then what did I say, 25, tabbing across, and then we're going to assume the amount. Now, what did we get in return? Meaning, what did they do for us? It could be multiple different things. If they gave us goods and services that we used in our business, it might be something like office supplies or something, or supplies that we would simply expense right off to an expense account. It might be something like a large thing that they gave us, like a fixed asset or something, which possibly we would have to put on the books as a fixed asset type of account. Or possibly they gave us goods and services that we use for our personal use, in which case you might put it to like an equity account, something like draws, meaning if you did work out of your business and they gave you something that was for personal use, it would be kind of like they gave you something and then you drew it out of the company. And so that would not be an expense account. You would want to put that into some kind of equity account, like distributions in some format, making sure it's an equity type of account, and it would still net out to the cash account. Okay, so we're going to put this in place. I'm going to say that the amount here is going to be for the 5,000. We'll say again, and so this will then, and this is going to be an expense. So the bill is going to enter an expense, and the other side's going to go then to accounts payable. So I'm going to say save it and close it. So now if I go back to the balance sheet, now we have a accounts payable increasing down below in the liabilities account, it going up by that 5,000, and then the other side is going up to the expense account on the profit and loss, and there's our supplies expense that went up by the 5,000 here. Then we're going to assume that we get paid on the bill. So notice we can track, the bill in this case, and then we can pay it. So I'm going to go back to the home page. We're going to go to the pay bill. Here's where the trick happens again, because when you pay the bill, it's coming out of the checking account, but it's not coming out of the actual checking account. We got to make sure that we take it to that clearing account. So down here in the checking account, we're going to change that to the barter account instead of that checking account. Did you know you can select default account? Okay, close that. And then we're going to say that we have that 5,000 checking it off. This is going to be on the date of, what did I say? I said 03/2025. And we're going to pay it off with assigning, I'm just going to assign a check number. And I'm just going to pay that off. And we'll keep the check. I'll just keep it blank and say, okay. There we have it. And that then should be going back to the balance sheet, decreasing the accounts payable. It goes back down again. So the accounts payable then here, where's the accounts payable? There it is. It goes back down by the 5,000. And then up top, we got in the clearing account. The clearing account went up and it went back down. It went back down to 0. If I go up top and I say, hey, I want to see those accounts that have activity in them, by going to the customize area up top, and I want to see the accounts that have the activity, which is in the advanced area here, and I want to display all rows, display non-zero or active. I want to have the ones that are active here, and I'm going to say okay, okay, and then now it's 0, but it's still displayed. I can double click on it and see that the clearing account went up and down. So we just use that clearing account in essence as a clearing account for it to go up and down. Notice that these two transactions could have been in the checking account, but then you'd have two transactions that aren't really cash related in the checking account. Not really a problem, except for the fact that when you reconcile it, it can be a little confusing, and it can be a little confusing that these look like they're deposits and checks when they're not actually deposits and checks. They're just being used as a clearing account, which you can determine by the fact that they're in the barter account, and that's what the barter account is for. Now note, you can initiate this full transaction the other way. For example, if the other company provided the goods and services for you first, then you might enter the bill first and initiate the transaction that way, and then you can track in accounts payable the fact that you owe this other person the services back. And then when you provide the services, you would then at that point do the same kind of process, complete the payment of the bill at that point, and then invoice, receive payment, and deposit at that point in time. So that's another way that we can kind of facilitate this barter transaction.